Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news China is tightening its grip on its major enterprises as their economy slows a little. Firstly, in New York, however, local Fed President William Dudley signalled overnight that market expectations that the US central bank would begin trimming its balance sheet were not unreasonable. He also said another rate hike is on the cards this year, a view not shared by markets. In Japan, their economy grew much more strongly than expected in the June quarter, extending the longest streak of uninterrupted growth in 11 years. It was up 4% year on year. In the recent past, much of the growth they've had has been under the stimulus of Abenomics and has been in trade and exports. But now we are seeing strong local consumption growth driving the latest data, and that is fundamentally different and better. Exports were down, imports were up, private consumption was up, and even private residential investment starred, up 6%. That is a big change for them. In China, the Communist Party is writing itself into the Articles of Association of many of the country's largest companies in a blow to investor hopes that Beijing would relax its grip on the market. More than 30 Hong Kong-listed state-owned enterprises, representing more than $1 trillion in market capitalization, have this year added lines to their constitution that places the party, rather than the Chinese state, at the heart of each group. Investors in these companies are buying into a party machine, and it invalidates Beijing's claim they want market forces to play a greater role in their SOEs. There is no transparency on the party officials controlling these businesses. Claimed SOE reforms will be a mirage. In economic data out of China, and that indicates a bit of a deceleration in July as Beijing's crackdown on property speculation and rising debt levels started to filter through to the world's second largest economy. The pace of Chinese industrial output, energy production, retail and housing sales, and fixed asset investments all slowed in July from the previous month. In some cases, it's a growing trend. And in Europe, industrial production fell unexpectedly in June at its sharpest pace in 2017, suggesting their economic recovery may be starting to slow down after an acceleration in growth during the first 6 months of the year. In New York, the US Treasury 10-year yield is up marginally, now at 2.22%. The price of oil is down more than $1 today, now at just over $47.50 a barrel, while the Brent benchmark is just over $50.50 a barrel. The price of gold is also lowered, down $10 to $1,280 an ounce. And the Kiwi dollar will start today a little lower as well, at 72.9 US cents. On the cross rates, we're unchanged at 92.8 Aussie cents and 61.9 Euro cents, and as a result, the TWI is at 75.5. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.